Hi, welcome back to your home of financial freedom. My name is Berlin. In today's episode, I'm going to be taking you through the differences between a switch bond and a buyback bond, and to clarify exactly what is going on in Kenya right now. What is going on with CBK right now. Now, CBK has issued a prospectus for a buyback bond. However, we had been expecting the issuance of a switch bond, which the Treasury had initially scheduled to be released in November, but that did not happen. So what is a buyback bond and what is a switch bond? That's exactly what you're going to be discussing in today's episode. But first, before that, a buyback bond, like I told you in the previous video, is when the bond issuer, the borrower, CBK, or your government decides to buy back the papers that you are holding. So a bond buyback is where the borrower, the bond issuer, CBK, comes to the market to buy back that bond from the investors. In other words, the bond issuer, CBK for this matter, is going to pay you back your money before the maturity of that paper, right? With the bond buyback, there is exchange of money. The bond issuer will pay you back your money, and then you forfeit your bond holding. Now, a switch bond is where the bond issuer will switch one bond for another bond. For instance, you are holding a bond whose maturity is in April this year. It pays, or in April next year, it pays coupons of 14%, and it pays coupon in April and October. Now, the bond issuer, CBK, can request you to switch this bond, which is due to mature in April next year, for another bond, which could be maturing 17 years or 6 years from now. I don't know if you are seeing the difference. Now, with the switch bond, you forfeit your rights under this bond, and then you are given another bond. The bonds are being exchanged. The terms of the bonds are going to be different. The coupon rates could be the same. Of course, depending on the prevailing market rates, it could be lower or it could be higher for the new bond, right? But you are switching bonds. Even the coupon payment dates could be different or could be the same month, but you are switching one bond. This FXD1 2023 or this FXD1 2023 whatever, or 2024 whatever, for another bond. Could still be FXD something 2023 17 or a 2024 whichever, but you are exchanging one security for another security, which could be either a new security being issued at that particular when the switch bond has been released, or could be an old security or an old treasury bond which has been opened. So in the switch bond, there is no exchange of money. No money is being paid out to you. You forfeit this bond and you're given another bond. With the bond buyback, there is exchange of money. You are given back your money, and then you forfeit whichever bond that you are holding, right? Now, with regards to the buyback bond, which has been auctioned right now, in the previous video, I had inadvertently said that you can net off these bonds for the IFB. Now, at the point when I was saying that, I had overlooked the settlement date for this buyback bond. Now the buyback bond auction will be happening on 17th. You need to be submitting, the submission deadline for this buyback bond is on 17th of February, the same date that the IFBs are being auctioned. Okay, so that means that you will need to have paid for the IFB on the same day that you are putting your bid for the buyback. So it is not true that you can use the proceeds of your bond buyback to pay for your IFB, because the settlement dates have a 2 days lapse. You need to have paid for your IFB on the 17th of February. And then 2 days later, on 19th February, CBK will pay you back your money on the buyback bond if you choose to take it up, right? Now, like I have said, for you to participate in this bond buyback, you need to have been holding the papers on auction. That is the FXD 1/2022/003, FXD 1/2020/005, and IFB 1/2016/09. Okay? Bidding is in multiples of 50,000 shillings. So you can choose to either request to be paid back the whole amount. If you're holding a bond of 7 million rather, you can choose to be paid back the entire 7 million now or 19th February, or you can request to be paid maybe just 1 million or 1.2 million, but it must be whatever amount you're requesting to receive back from CBK must be in multiples of 50,000 shillings. In the event that you had taken up a loan against these treasury bonds and you use them as collateral for your borrowing, then you cannot participate in this bond buyback, not unless you request your bank to cancel that pledge over these bonds. Okay? CBK says investors with pledged holdings on the above bond will need to cancel their contracts 5 days before the buyback value date to be eligible to participate in the auction. So you can put your bid, yes, but your bank or your lender must cancel their pledge over these securities 5 days before the settlement date. So that means by 14th, preferably by 13th of February. If they cancel it on 18th of February, hautapata pesa, you'll not receive your payment, you'll have to wait for the maturity of those paper or sell in the secondary market. So ideally, that is the difference between a switch bond and a bond buyback. A recap, with a switch bond, there is no exchange of money. There is no liquidity for you, the investor. You change the terms of one, you forfeit one bond and you're given another bond. It's more like moving from one house, from a 2-bedroom house to a 3-bedroom house, or moving from one house to the next house, right? Now, with a bond buyback, it's like moving from your house and you're given back your deposit for that house. It's like selling your car. Good. A bond buyback is like taking your car back to the car dealer, and then the car dealer will give you back money. Or you tell the car dealer to sell your car on your behalf. You take your car back to the garage, or to the car dealer rather, and then the car yard will give you back money in exchange for that car. Right? Now, a bond buyback is like a car trading. You surrender your car to the car yard, and then the car dealer gives you another car. That is a switch bond. With the bond buyback, you give your car back to CBK, and then CBK gives you money. With a switch bond, you give your car back to CBK, and then CBK gives you a different car, which can be the same make, can be of a higher value, can be of a lower value, but it must net off. All right? So if you haven't subscribed to this channel, you are missing out on a lot of information. Please press the subscribe button, and let's meet on the next video.